if somebody's listening today and they're thinking, hey, I would love to kind of follow in the footsteps of Charlie Stevenson here, and we know that you started with a condo and you then bought a 5-unit, and then you just continually kept expanding this process into bigger and bigger multifamily. Could you replicate it in today's market?
Yeah, it's a good question. And I think the answer is definitely. I think we built this business on the premise, and one of our other parts of our investment thesis is we are not market cycle dependent for our acquisition efforts. Certainly, we're going to be sped up or slowed down by deal flow and quality deal flow, but we want to be growing and acquiring, in any environment. The fact of the matter is, while we were lucky to be catching the tail end of that big appreciation upswing. We were so lucky. We were about 2 years into a continued really big upswing growth, which helped to appreciate our assets in a really rapid way and helped us to then sell them to a really strong buyer's market as a strong seller. So we had all that wind in our sails, which just gave us a huge amount of then, capital to then deploy into the next bigger asset. But even if there isn't that really strong both seller and buyer's environment, like we're kind of experiencing a little bit of like slack right now, there's still opportunity. That not every buyer has the same motivations that are market related. There's distress in every market cycle. There are going to be did I say buyers? I mean, there are sellers, there are owners out there that have different needs, that have motivation to sell at any stage in the market. And while deal flow has certainly slowed down, marketed deal flow from tier 1, tier 2 brokers has definitely slowed down. There are always going to be ownership out there that have some life event or some change in strategy that is going to dictate a need to sell. And that's the kind of the opportunity that we see right now, which is finding those particular scenarios. Maybe they're distressed, maybe it's some kind of a management issue or a change in allocation that they're going through, where they need to disposition a 200-unit asset. We heard a story not that long ago about a group that was a development group, and they developed large multifamily assets, and they decided to get into multifamily repositioning, which is what we do. We buy existing assets, fix them up, and hold them and or sell them. They got into that and realized that it wasn't in their core competency, and they had this 1,000-unit portfolio and needed to get rid of it. And they're like, we want to stay focused on development. That's our bread and butter. So let's get out of this as soon as possible. We're willing to sell, as quickly as possible. We don't need to wait for the highest possible bidder. We have our numbers in the pro forma. Let's hit them and go. So there are opportunities even like that. It's not even like it was distress. It was just a change in investment thesis. And so change in direction. So I guess to answer your question more succinctly, there's always opportunity. There's always distress in the market. There's always times to enter into the market. You might have to work a little harder. You might have to put a little more energy into finding those deals and off-market deals. You have to put a little more sweat into it. But there's deals. And so, that's how I would, first of all, affirm myself and give myself confidence to continue, having, if I was to talk to myself like from then to now, but also, just keep at it, keep learning. That if you just give up, then there's no ask, no get. Like if you don't keep building and keep working and trying to figure it out, then you're going to have the same thing that you have now, which maybe is okay, maybe it's not. So
let's talk a little bit about the effort involved with that statement. So often I just perpetually hear folks coming in and wanting this dream of passive. If I had $1 for every time I heard that word used, I would have plenty of passivity myself. I'm wondering where this idea was sort of originated, because it's so often associated with real estate. And I find it extremely hard to believe that you guys have gone out there and created this life by being passive about it. You don't end up with 500 doors without a ton of hard work. What can somebody expect that's trying to build a portfolio of that size, or even just enough of a portfolio to create the lifestyle of total independence. And what really is necessary here? What can somebody expect on a day-to-day basis or a week-to-week basis? Can you truly break it into sort of a, if you don't invest at least 10 hours a week, if you're not putting at least 20 hours a week in, is there a way to narrow that into a bit of a more tangible number for people listening?
Yeah, totally. So yeah, what we do is not passive investing. We bring investors, limited partners into our deals who truly are passive investors, and they're earning passive income from what we're doing. But passive income means you literally are doing maybe nothing more than at some point signing some operating agreements and wiring your money, and then you're getting some kind of a distribution on a quarterly or monthly basis or something like this, and then the lion's share of what you of your return at the sale. So that's truly passive, and we bring investors into our deals so that they can earn passive income. What we do as operators to build this business is by far like as active as it gets. We've got 3 partners, we're full-time on this business. We have meetings every single day. We have a structure. We have systems and processes that we've built to manage ourselves, manage our goal setting, manage our key performance. We have KPIs, key performance indicators that help us to make sure that we're focusing on the right things to produce the results that we want in our business. There's a lot. We've built a big mechanism that requires a lot of active work to maintain. It's gotten easier over time. And you were talking about kind of like rocket ships launching off. We use that analogy all the time. Like when you first get going at this, when you see like a shuttle or the SpaceX thing, I always think of the original shuttle on those big orange, that big orange structure, the huge gas tanks. So, for back in the day when a shuttle needed to leave Earth's atmosphere, that little tiny white airplane looking thing riding those entirely huge orange gas tanks, that's what you need for the first couple of probably 2 to 3 years, I would say, is you need those big gas tanks. You need to be putting a lot of time into this. You need to be networking and hustling and meeting as many people as you can. You need to be attending conferences and paying for conferences. You got to be spending money to eventually make money. And yeah, the first year or 2 or something like this, like most of those assets you buy probably aren't going to be like humongous cash cows. They're probably going to make enough to get by, maybe a little bit more. But if you can make $100 per unit, on what you do, you're doing really, really well on a monthly basis. We definitely didn't have that kind of result from the beginning. So we were investing a lot of our own money and a lot of our own time into this business, and we still do. But for the first 2 to 3 years, that was an immense effort to get to the place where we started to realize, quote unquote, financial freedom or truly passive income. And as we grew our balance sheets and started making more money and built some wealth, then we started deploying it into other things personally, in addition to what Akras Capital buys. So we deploy capital into a liquidity fund with one of our partners, and that produces a 10% monthly return. We put some money into a development project in Boston to basically convert an old apartment building into a condo conversion, and we made some money there. So we started having more capital that we could then start deploying into different things, and those things were producing truly passive income for us because we were then investing in other people's projects as well as investing in our own assets, which were producing passive income. So while there was a major active component to it, to our business, and still continues to be, the wealth that we were starting to accumulate started to actually produce passive income for us as well, which we now really enjoy, and it pays for all of our expenses and allows us to go and travel and spend time with our family. And like you were saying earlier, not have to sweat, a price tag. And that feels really good when you've got that foundation, and then everything you're making on top of it can be used to deploy into other investments and to fuel our existing business and to make impact in places in the world that mean the most to us. So minimum 40 hours a week, at first, a lot of travel. You're spending, a lot of money conducting due diligence, educating yourself on how to underwrite deals by attending boot camps and workshops, and going to conferences to learn as much as you can from your peers and creating partnerships, all that requires money and time. And, I don't know that there's other ways to do it. People always say, oh, I want to get rich quick, but real estate is get rich slow, but you got to start doing it. Push through that energy barrier that might be there for you. All those, thoughts and feelings that says, I don't know that I can do this. Because once you start doing it and once you start seeing a little bit of success, it really starts to fuel you. And then when you start seeing impact on people's lives, whether it's the investors that you bring in or on the places in the community where you're actually, making an impact on the workforce housing, then it really starts to fuel you. And, and then eventually you drop those huge orange shuttle gas tanks, right? And the shuttle is just outside the atmosphere and it just requires a little bit of like gas here and there. Like now, like where we are now, our team works, as much as we need to. That's about 4 days a week is our current focus. We could have gone a little bit less, but we're now in a big scale up. So we actually have increased the amount of time that we're working on the business and taking care of our investors and our stakeholders so that we can grow bigger and make a bigger, more outsized impact. So we found that when we went down to for a period of time, like a quarter, we went down to 3 days a week or something like this, and having that much time off, it felt really empty to us. Yes, we were traveling more. Yes, we're having fun, but we didn't feel satisfied. And that would be, I guess, another takeaway, which is when you start to experience that financial freedom and start to have that wealth, get busy, being of service to other people. That's where true happiness lies. Get out there in your community, donate some money, start working with Habitat for Humanity, make sure that you're taking good care of your residents. Don't be a slumlord. That's where the true satisfaction comes, is from being of service to other people. And that's how we've reoriented our company. Really in the last 6 months or so, we've made impact the tip of the iceberg. That's not the tip of the iceberg. The key performance indicator for our business. Certainly returns, assets under management, revenue are important to us, and investor satisfaction and resident satisfaction. But we want impact in the communities that we invest to be what ultimately drives us, and ultimately what Akras Capital produces in the world. So there's a long.
Who asked questions? I know you've got a couple cool things that I know that you want to make sure to share as well. I had a couple questions for you, if you don't mind. The first is, when you talk conferences and education, were there any specific resources that you might want to share that you felt really changed the direction for you, or really ignited you, that gave you information that sort of changed how you went about doing things?
Yeah. So there's a conference that we went to that helped us to move beyond the smaller sub 20 unit assets and into the much larger space where we could do much larger deals and scale up. And that was Joe Fairless's best ever real estate investing conference, or best ever syndication conference. We went to that here in Denver, where I live, years and years ago, and learned a lot about what our peers were doing, learned about the process of syndication and what that means and how to do it, and built a professional network to support syndication. And we built some relationships with some other operators who we then partnered with on acquiring the larger deals. And not too long after attending that conference, we went into partnership with this group and bought a 324 unit in Orlando. We were a small part of the GP. We were not the lead sponsors on that deal, but it was what allowed us to watch them and learn from them, and also deploy capital and build our investor network capability to bring capital and experience to that deal, and really stare and compare and see how is running a 300 unit different than running a 20 unit. What's the similarities? What's the differences? What would we need to do in order to be the lead sponsors on a 300 unit deal? What relationships do we need to have? What track record needs to be in place, et cetera. So that Joe Fairless conference that happened in Denver was a great investment. I highly recommend it to anybody that's looking to scale up. And then that was kind of one of the inflection points for us, for sure, was attending that. We've been to it a couple of times, and so I would share that resource for sure.
Okay. Any books that you would point people to?
Certainly, Matt Faircloth has a couple of really great books on syndication and capital raising. Joe Fairless's Best Ever Syndication Handbook was really great for us. What else have we? I mean, we're constantly reading books about even how to organize your income. Like Profit First was a really illuminating book for us on how to make sure that we're paying ourselves and not just taking everything that we earn and put it right back into our business, but how do we reward ourselves? How do we ensure that our groceries and our financial freedom is being taken care of, as well as our tax liability, as well as our operating costs, of the actual asset itself. So that's another one I would highly recommend. I could keep on going, but yeah, there's a couple.
I know you have an opportunity too through Akras. Talk to me a little bit about what it might look like if somebody wants to reach out to you and work alongside you.
Yeah, thanks. So, I mean, where Akras is right now is we're making a big scale up leap, jumping into the much larger asset kind of acquisition kind of realm. And in order to do that, we want to bring folks along with us for the ride. And there's a couple different ways that folks can join us in scaling up. One is by being a passive investor with us. I'm building our investment capability now. So if you're an accredited investor and want to learn more about what Akras is purchasing and earn a solid risk-adjusted return, would love to have a conversation with you. You can connect with me, and I think my contact information will be listed in the YouTube channel description. But my email is cstevenson@akrascapital.com. If you're an investor and you want to just see what we do, our website, akrascapital.com, is a place you can go and learn a little bit about the types of properties that we buy. There's also a ton of resources there for you to see kind of what syndications are and what kind of returns you can expect. We have an ebook there you can download. Another opportunity is we're looking to build our networks in our target markets, which right now is Mesa and Phoenix, Arizona. So if you're in that market and you want to be a hustler for us and help us find deals, off-market deals, we have an awesome program that rewards and compensates people for bringing us deals. We're also looking for on-the-ground partners to be folks that go and look at the deals when they come to us, help us with asset tours. And that's going to require a little bit of experience and understanding of what to look for in buying one of these big assets. But certainly we want to be building that network in Phoenix and also in the Carolinas. So if you're in South Carolina, North Carolina, and you want to connect with us about potentially joining on and supporting us in some way, I'd love to have a conversation with you. And again, my contact information will be listed in the description, and happy to have a conversation. You can find me on LinkedIn and our website all over the place. So yeah, thanks, Matt. I appreciate the opportunity to kind of share with folks what we're up to.
Of course, that's awesome. Is there anything else that you can think of that you want to leave everybody here with today that you believe is imperative to somebody being in real estate in this crazy time? I feel like we've covered a lot of territory, but if there's any final parting words that you think we've missed, I'd love to hear it.
Yeah, I mean, while there's a lot of volatility in the market, and especially when you look at craziness and the stock exchanges and in crypto and all that, real estate continues to be an awesome, stable place to invest. There's been anywhere from 5 to 20% drops in basically acquisition price, which to me spells a big opportunity. So this is a time to potentially even jump in and test things out. If you're just looking to get into real estate and don't want to necessarily be the operator and buy yourself, jump into a passive investment opportunity with a group like ours. That's a great way to learn. We began investing passively with some of the operators that we partnered with right away because we learned a lot about how to operate investor relations and what they look for. Just reading offering memorandums teaches you a lot. So get involved, even if it's $50,000 and throwing it into a passive deal. You're going to learn a lot and park your capital in a safe place while the rest of the financial world goes up and down and up and down. So just get started.
What type of a return can somebody expect on a fund like that? What's a range?
It really
realistically
varies depending upon your kind of risk level. Anywhere from I think a 10% to a 20% return is something that you could respectively look for right now. we tend to set expectations anywhere from 10 to 15%. 10% cash on cash is sort of our target or something like this. And but we always say, be careful for the stuff that has the really crazy returns. Like, really dig into it. Really make sure you vet the operator. Make sure you vet the business plan. You don't want to be investing in stuff that has only the best case scenario outcome as the baseline for performance. There's a lot going on right now, and you need to make sure you're getting the right debt. And if you're not getting the right debt, you could be along for a ride. So, and there's a lot of other things that can mess up a deal. So make sure you invest with an operator that you trust, that has really actually conservative underwriting. And but don't be scared. Get in there. Don't wait to buy real estate. Buy real estate and wait. That's the old adage that I like to share. So.
Okay, perfect. I love it. Well, look, I'd love to bring you back on at some point if you're open to it. It would be really cool to see how you guys end up deploying this money that you're sitting on right now. I'd love to see how these new bigger deals that you're looking at all work out for you. But a lot of what you said is so invaluable, and the fact that you've been able to accomplish what you have within a 5-6 year period of time is really quite outstanding. And we always tell people, if you're willing to hustle 10 years or less, you should be able to get into a point where financial independence is completely achievable. And you're proof. So I respect it and really appreciate you willing to come on and open up. I know it's not always comfortable to share your personal specifics, but you've been very generous.
Yeah, thanks, Matt. I'm just grateful for the opportunity and grateful for what we've been able to do. And hopefully it's inspires people that, anybody can get into this. Somebody, even someone that's never done anything in real estate before, has any really true, investment experience, but partner with the right people,
Partner with the right people.
Partner with the right people. Surround yourself with good people and partner with them. And happy to come back on, and happy to be a service to you and a resource to your listeners. So feel free to reach out to me. Please do. I'd love to just have conversations with other investors and people getting into the space.
Absolutely. We'll go ahead and throw Charlie's contact information in the description below. So make sure you check that out if you guys want further details about what he's up to, or if you're interested in potentially participating in that too. Guys, I certainly appreciate your time for checking this out today. Charlie, once again, thanks again for all your generosity. And until we see you all on the next one, guys, make it a great day and keep on cash flowing. See you around.
Cheers. Thanks, Matt.